Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for March 2nd, 2023. Start with the swing portfolio review. So this is Alcoa on 30 minutes. These are all 30-minute charts. So the black box represents the 30-day high, which happened off screen. This box here represents the 10-day range. So we got a new 10-day high today, and here was the 10-day low. This shaded blue box is the 5-day. This yellow box shows the 1-day range. And then I like to keep this one projected 1 day in the future so that I can see what my mechanical entries would be, my mechanical exits if I'm doing swing trading 1 day at a time. You know, that would be this kind of a move. And then this is the yellow zone in which we can trade if we see a 2-to-1. Like, for instance, in Alcoa, yesterday we closed a position that had 2 entries and then was tailing off, and it was near the 10-day high, and we liked that. Then today it made a Kata 2 low here. Those are all Kata 2s. And then the intraday move was worth taking because on 1 unit of risk down here to the PSAR, I had 2 days to yesterday's high or the 10-day high. So that was legitimate to take that. It closed so well that I converted this intraday trade with a tighter risk box to a swing trade, meaning that I sold off 80% of the money we made in here to hold it overnight and then look to maybe re-enter tomorrow if it continues, which it has a good chance to do because it closed above the previous RL10 high, and it made a new 10-day high. So after enjoying this nice move off the 10-day low and cash it, I like that one because with this much of the channel, we got that part of the channel. That's a really good trade. This exit here preserved the angst of that sell-off on 2 positions. And then this is just an orderly re-entry. And then I'm looking for a continuation play to the upside. So we're holding about 2R on that open swing trade. Cliff was a similar play in that, we had, after the long sideways quiet channel, had a gap up, an MMRB off of the low, and closed really well after a little over 2 days. Reinitiated here today, and that one is holding 3R. And looking for more. And then if it breaks above the 30-day high, I'm really looking for more. These black boxes, by the way, like this, are simply showing the duration of the trade from the entry, the initial risk, and then the exit. So Cliff is looking really good. I'm going to jump down and hit U.S. Steel real quick and get all the metals at once. Now, U.S. Steel was the most extreme version of this because we had an entry. This was an intraday entry that closed really well, so we converted it to a swing trade. And on that risk box, which was down here at the 10-day low was made that morning. After this hesitation, we got the second position, third position after it took out the previous swing high, and then after a gap up and then started selling off, it just had to get out of that. And that was 10R. And then today, it gave an orderly caught a 2, and that entry was already taking out this RL10 work here. So I'm holding that one with about 0.5 of an R. But now you notice that there is no resistance overhead, that it's going to break through the 30-day high pretty quickly if there's more buying pressure, and why wouldn't there be? So that's the 3 metals. Caterpillar we initiated yesterday. Now I'm looking smart. It had a gap up, an MMRB off the low, closed really well. Today, it just picked off from where it sold off and just continued to power higher. I was really considering a second position here because it had taken out the previous RL10. That's an emerging dragon. But I was content to just let that thing run on a single position. And then that one is holding 1, 2, 3, 4, 5, 6, 7. That's plus 7. 2 days into that swing trade. What I really especially like about this is that that previous resistance level has been defeated, and this thing is ready to go. I'm gonna step out of this just from off the 30-day, and I want to go look at the dailies. That thing's in great shape. So now I'm looking at the 150-day look back, and I notice there's this peak and this peak, and we're right here at 252. So it only takes this much of a move to break out to all-time highs and push in the 150-day high. That's just as nice as it can be. And I would love to see, like after this congestion, it had this kind of a move up. I'd like to see after this congestion that kind of a move up that takes out that high, and then this should really go. And Caterpillar, great American company. And if we look back, that thing's pushing all-time highs. That's an all-time high. If we go all the way out to 9-day, this thing is just as good as it can be. So I'm liking Caterpillar. I wish it had gotten in sooner. My fascination with Godzillas and rebounds sometimes blinds me to these fireworks type moves. I'm trying to be a better person. But we got it at the right moment. So that's we're back to the 30 minutes, and we're holding, what did I say, 7R? Yeah. Excuse me, CVS. So this has been one funny series of just one-day trades, taking little sound bites out of it. Today, I wasn't quick enough to get the sell-off, but it did not fail further today. So this felt like a support level. And would you be surprised if this thing ends up doing that? You're not allowed to be surprised if it does that. Why do I say that? Well, because this is a Godzilla, and it can make those. There was buying pressure on this thing way back here on good earnings, and all it's done is just been miserable. But if this can hold support here at the 30-day low, I'm not opposed to buying that. Now, why don't I just buy it today and not worry about the gap? Because this thing could just, because that's the move. Like if it fails below here, I'm going to be short so fast, I'm not even worried about it. And then if you want to just be relaxed on it, you can just say, let me see it get out of today's range before I get long. Now, you might be aggressive and try to get this, but if I was going to trade that tight, I'd want to be on the 3-minute chart and then try to grow it here intraday and then do a swing trade from here. And now you've got each of these little price levels where it failed before now become resistance on the way up, and that just gives you a very nice price ladder. The easier one to see, of course, is this one, but someday this will be okay. And I'm just going to keep trading that intraday, one day at a time until we see. So this was yesterday's speculative one on diamonds. This is, the argument that I just made on CVS where I didn't take the trade. I made the argument last night of why that was such a low risk speculative entry. But because it had already put in that double bottom, it's probably worth going back and listening to that again, because we took an end of the day position here with a tiny little risk. And all that thing did today was give us 1, 2, 3, 4, 5, 6R on the first position. And we got a second position here for 3R. That thing is holding, 6 plus 3 is 9. 9R on DIA. And now it's at a crucial price level that if it can break through all of this, that's not resistance. The next target is up here at 336. So as big as today's move was, there's another. All it has to do tomorrow is what it did today to get back to something like fair value. So those extremes are really worth noticing. And you will recall that yesterday when we sorted this by the reward to risk ratio, diamonds were the most favorable reward to risk ratio. So that actually makes this a very low risk trade, and it makes a critical state trade, because if it fails, we just would have been short and would have loved to see a move like that. We'll just take the hit and then get short. But if it doesn't fail, maybe it'll go up. Oh, maybe it'll go up 9R. So that's the trader's logic right there. All right, so diamonds is looking pretty good. Check or hold. Devon Energy has been in that sideways. It's not a death spiral because it's not doing anything, but it's been dying. And yesterday at the close, we just did a little COTA 2 entry to see what we could see. And it actually gave the first sign of life at this price level. And now the 10-day high is in range. If it just, so here's today's range. If it just does another one of those, it will have cleared this, and then it's postured to go back to 64 because it's going to close that gap. So this looks promising, and the fact that it failed to fail further just meant it was gathering energy, and now maybe that's the beginning of buying pressure. Maybe that's the first wave of buying. So we'll see. EA. This one was a short. Let me zoom in on that one so you can see that. So this was a short yesterday. After having waited a few days for that one and then just getting out with a no lose plus dinner for 2, when that rolled over, we got short. Then it opened today in here. We took the scratch. It moved an MMRB off the top, so I just reversed to see what might happen. Oh, and that happened. And because I have, it's a narrowly traded company, I just decided to take the +3 and be content. And now I'm ready tomorrow on this kind of a breakout box. I'm ready to do this, or I'm ready to do that tomorrow, and the target would be back here. So that's a one-day gift, and happy to take 3R on that one. Emerging markets. This was a let's see here. Yeah, so here's where this was yesterday and closed inside here. Today it broke across the dragon. It did not fail to come. Yesterday was a gap up and hold. It did not fail. And when it crossed over the dragon, we just took it with a standard risk box, and it closed pretty well. So we're at about plus 0.5 on that one. And this is the 5-day high here. So if it can break above that, that's going to feel pretty good. And we'll be happy. So in its larger life cycle, this thing has a long way to go back to its 10-day high. So I like that we're holding 0.5, and this should be some clear running if we get any kind of recovery in the globals. Mexico, today was we had this one down here by the 10-day high, and an SSC suffered a little bit. When it broke above here, we added the second position, and then today, this morning it opened up and started failing, and I didn't want this one to go negative, so I just took the exit here, and this is about 1, 2, 3, maybe 3.5, and that's a nice little move in Mexico, and it's so near the 30-day high that I can re-enter this one should it continue to work. So I think there's more available, because that's at an all-time high, or all-time recent high. That's pretty good. So pretty happy with Mexico. Brazil. This one was an SSC that we started yesterday because it had failed. It had failed to fail further. Crossed. We took that one yesterday. Today it gapped up here and then started selling off. So I just exited that one. It never failed further, so I couldn't there was not a short play on that one, but I will be prepared on weakness tomorrow. If it violates today's low, I'll be short that one. I will also be long this one if it breaks out above today's high. So I'll just take that one as a compound critical state near the 10 and 30-day low, and there's a 2-to-1 up to the 10-day high, so I'll take that automatically tomorrow. Intel was a beauty. It gave us, this is the core position. I'll show you the turbo a little bit later. This gave us some Kata 2 action, cross the dragon, standard risk to the PSAR flip, and that just took off and gave us 3R into the close, and it is cleared and made a new 5-day high. So all that stuff is history. And now the next target is this cluster up here. And all it has to do tomorrow is what it did today. And we'll have a 6 to 10R trade on that one. So I'm really liking Intel. Real estate was a micro gain, a scratch basically on the short. It did not fail. So we cashed it, stopped and reversed because it's a defensive asset class, and it closed really well on a standard risk, so we're holding +1. And my target would be up here around the 5-day high and the peaks of the RL10. So there's another easy 1-day move in this before it gets put to the test. And by being put to the test, what I mean is it tried 1, 2, 3 times to break above 88.50 and failed each time. Fail, fail, fail. So what I'm hoping to see tomorrow is it continues to march, and then if it gets here and starts to fail, I'm out. But if it breaks through to the other side, the doors, then I could put a second position aiming for the 10-day high. We want to see it break on through to the other side. Marijuana, this was a short yesterday that we were happy to collect 1R on. Today, it gapped down and then took off, cleared the hump here, so that became an emerging dragon and an MMRB, and that just went. Beauty. I'll show you the turbo on that one. Clean energy, similar, only the short was more pronounced. We cashed that one on a 1, 2, 3 exit for 1, 2, 3. PSAR flip, SSC, and now we're long, and it closed pretty well, and we're +1 in hand. I'll keep the stop down here. Rivian, so this was yesterday. This is just a reminder of yesterday's gift, that overnight it dropped that much, and we were able to luck into that position because we were prepared when it collapsed, when the floor collapsed on the collapsing dragon, got the second position when that collapsed, third position, and we're just happy to get out of that. There was a little bit of tactical buying pressure, but all it really did today was just take a deep breath and stabilize at 1570. Now that's instructive. After that kind of a move, and noticing that there has been no reluctance to sell, the absence of selling today makes you wonder, what's up with that? Failure to fail further? Sure. So that means I'm going to put in an automatic buy order above 16 and a quarter, and maybe we'll just get surprised into an entry that gets halfway up the stack, or maybe all the way up the stack, and we'll put if we get that entry here, we'll just put that kind of a risk box like that on it, and 1, 2 to here, 3, 4 to there, 8 to there. So that would be fine. But if it fails, then I think I could get short right here, but certainly right here, and then be ready to go that way on the further collapse in Rivian. Quick look at the S&P. Now, I'm not trading that one on a swing, but I like that it held support here and finished really strong. And now tomorrow, here's the test. It has to break through all of that glacier. But if this thing can go, then it gets to here, 406, and then 412, and all is forgiven. So this had a lot of late afternoon buying volume that looks like it wants to front run a move for tomorrow. So I'll be ready for that. That would not be offensive. Treasuries. Let's see. We got today was a gap. We had no position. A gap down held, and on the SSC, I just decided to hold a position overnight to enter at the end of the day, right at like 99, believing that it's going to break through 100 and get up to 102 or even up in here. So that's just a speculative, oversold kind of a play. And then finally, Tesla, there's a little bad news is going to always happen on swings because of the stupid gap. And no, it's stupid traders. It's not a stupid gap. So yesterday I initiated a COTA 2 from here with a standard risk box that was wide, believing maybe we could get to here and then here and back to the 30-day high and beyond. They had I thought he announced some news at the investors conference after hours, and that might give it a boost, but it was disappointing. And even though that was my 1R, it gapped down to here, so I just got out and took a -2R loss on a 6% adverse gap. So you got me for 2. Well done, Elon. All right, that's the swing trade portfolio. We'll now go to the intraday stuff. So this one is, these next 3, these are all on 3-minute charts. So here was yesterday's close. This is the OR3. There was no gap. All it did was just immediately drop like a rock. And then it held. And then this was like an MMRB off the bottom. I just said, well, let me just try it and put a stop in. It had moved more than an MMRB off the bottom. So I just held my nose, bought it, standard risk, and if that one fails, I'm going to be short in a hurry. So that's actually a very low risk idea. And the payoff is large if it just gets back to the top of the day, because that would be 1, 2, 3, almost 4. So that's the argument for that morning hook. Now this one got, it did this, rolled up here, and then started failing again. And after 2 legs up, I just wanted to cash and make 1 to get started. So I did, and then it immediately reversed and made a new high of the day. So I simply re-entered and then kept the same risk box. You know, this risk box is the same as that risk box. It gets interesting if it can get above that hump of the dragon, and then it could really go. So this is my tactical space in here, and all I have to do in the tactical space is get my stop above my entry so that I can get to no lose plus dinner for 2 and make it a science project. Check or hold. It didn't, so it failed. So it basically scratched. And then it dropped like a rock. So this one went nowhere, scratched. It fell through the bottom of the MMRB. And now, if I can get 1, 2 MMRBs down to the low of the day, that's not a surprising move. So now I'm risking 1 and hope to get 2. And then if this fails here, I'll add a second position on the 2R battle drill. Lather, rinse, and repeat. Check or hold. Micro loss. I should have gotten out of that thing sooner. Failed. What I noticed was this little move up came back and then started to go back up again. And I interpreted that as a little Kata 2 inside. It's a Kata 2 all because of this, but I also saw this as a little Kata 2. So I was ready to get long there. Failed to do so. Now, after it actually broke the now we actually have an official Kata 2. Look at that, you got double scoop. And now it broke the PSAR, so just a little bit of patience. That's unusual behavior in me. That would be acceptable. This is patient. So there's my standard risk box. And again, I still got to get above this price level, so that makes this the tactical space. And again, the only thing I have to do in the tactical space is get my stop above my entry so that I can lock in no lose plus dinner for 2. In other words, can I make $100? So if the worst thing happens is that I make $100 and we can go to dinner for 2, okay, that's a pretty good day at work. If that's your worst day at work, that's a pretty good day at work. Now, this is a crucial moment here. So this threat never breached the PSAR, and then recovered so fast that all it really did was make the RL10 roll over, and then as price started to resume, the RL10 rolled over. So the RL10 never breaches the PSAR or causes it to flinch, at which point I say, you know what? If it didn't fail there, and I'm holding 1.5, why not? And then if it breaks above this, that should really go. So I just decided to take it. That worked pretty good. And when this one never even penetrated the dragon, I mean, that's 20 minutes. And then this starts to hook back up again. I just put the third one on. Feeling froggy. Standard exit, standard re-entry, one risk box, check or hold. Two-hour battle drill, second entry. Standard exit near the end of the day. What is this magical growth stock? This new biotech amazing performer. Oh yeah, Alcoa Aluminum, for crying out loud. Yeah. So after the morning shakeout, whatever that cost, here's 1, 2, 3, 1.5 and 0.5. So that's about, that cluster is worth about 5. And this one is worth 1, 2, 3, 3.5. And that one is worth 1.5. That's another 5. 10 in Alcoa. Now, that's the turbo trade on the Alcoa swing, which is this one. So that move right there was a 10R turbo trade, and that easily pays for this swing trade, which is holding 2R, and that swing trade is not risking any core capital because you just use the money from the turbo trade to fund the position. Check or hold. Fractal patterns. This is exactly the same patterns and interpretation. It's just on 3-minute bars instead of 30-minute bars. But all the decision making is the same. The only thing that makes them different is managing the overnight gap risk, and then some. You get this craziness in the first half an hour or hour. Just got to deal with that. Deal with it. All right, so here's yesterday's close at that little doji. Here's the OR3 box. And then on the fourth bar in, it breaks out, so we're long. Check or hold. There's your standard risk box, standard scratch, standard re-entry, standard exit for 0.5. I thought really hard about getting short. Wished I had. Learned to deal with the wishes. SSC, standard risk. Now, because this little peak happens intraday, I just draw that line across. And now I'm very interested if it can clear the statistical peak. Check or hold. Second entry based on logic. And so forth. Now you notice that the day ain't over yet. So wherever that thing peaked, I start drawing that blue line and say, if it ever gets above that, count me in. And so this one on standard risk is about 1, 2, 3. On this one, about 1.5, 0.5 on that one, so about 4.5. Standard reentry, check or hold. Second position because it's above that's an emerging dragon and failure to fail. And standard exit near the top there. And this one is, let's see who this guy is. Intel. So the Intel swing is this one. So that's what that, now, because this just bottomed out and caught a 2 and then just had that nice successful trade that cleared the previous hump and made a new 5-day high, it still has all of this room to run on a swing trade before it even gets interesting. Like a move back to this level that were to stop right there would not be surprising. If it just hesitated right here, that would not be surprising. But this move from here to here, there's no resistance in there. It's already cleared it. So this thing is in a posture to continue for the next 2 or 3 days. So it might do that. It might also just roll over here because the last time it was here, it rolled back to here. But it had plenty of time to fail and it didn't. And there's Kata 2s galore. And that has some upward energy in Intel, for crying out loud. So I like to kind of project some narratives forward to start shaping some expectations. So I'm not surprised when price happens. If I've done my job with standard framing, I've looked in both directions and seen what it could reasonably do. So then when it reasonably does what it could reasonably do, I have no reason to be surprised. And then can just get on with decision making. All right, here's the last one. We'll do one more. So this is OR3 again. Here was yesterday's close. Here was the OR3. It breaks out. Standard risk. Hoping for glory. Fail. Re-entry. Micro. Re-entry. It's getting some traction. One position, standard exit after an intraday move of 1, 2, 3, so plus 3. This is MSOS, marijuana. Just an intraday gift, and happy to get paid on that one. So standard work, and just, they all look the same leaving the river or leaving the station. And then it just moved instead of mucking around. On a different day, I might have gotten a second position, but I had a lot of other span of control issues going on, so this one was just enjoyable. A local commuter trip. All right, let's go to see how the boys are doing. Yeah. All right, so here's Nolan with Tesla. Now, what I got to say to Nolan is when you have that kind of a 6% adverse gap on the most important stock in the world, find that low, put your MMRB on it, and there's your morning hook, and the retracement to here is what you're planning for, and then take it halfway, and now you can start getting this on failure to fail further instead of waiting for the actual confirmation. Now that's a good exit, This one is a good entry and a better exit, and then staying out of the chop. So that was reasonable. The only thing I might coach you on is if you're going to play that kind of an extraordinary reaction to gap, trust the morning hook sooner. Satya with Devon Energy, he decided to work just on the 30-minute today. Um, and he took that as an OR 30, and it broke out. Standard risk, orderly exit, 3.2. That looks a lot easier than what I did. Exit at the final bar for today. It was starting to slide down, and no overnight risk. Satya sleeps well at night. Now here's 3 from Ed, and I might is Ed on? I might invite him.
I'm here since.
Yeah, let me see if I can interpret this thing,
Mhm.
and then I might ask you and Bill to maybe comment on this. So what these guys are doing is looking at how to interpret price action, and then in places where um, you might be wanting to make purchases of the underlying, finding ways to play with the with options. So this one, oh man, is it getting ready to crash on me? Tag nabbit. I may be losing the recording here. Oh no, nope. Maybe we're back. All right, let's try it again. Go ahead, Ed. You and Bill, if you could talk through it.
Oh, Bill, you want to give the background, and then I'll just say what I did.
Yep. So we were discussing last night in the after hours. There was something that I've been working on with Trader X, and it has to do with trying to front run even the PSAR flip. So what we're trying to do is right between right about 10:30 in the morning is the stuff that I've been targeting, and I'm using Williams percent R and the MACD. But our setup is a little bit different than what Eddie has adapted for options at this time. But right where we're seeing that area, it was how do we capture that? See how you have the dragon horns right at 10 o'clock, third bar in from the leftmost circle. So what we were trying to do is catch that on the yeah, right there. So that's the first signal when we're looking at the Williams percent R, that hey, there's a little bit of buying pressure coming back, and maybe foreshadowing the eventual retracement of the stock. So again, it's not based on what you're seeing here, the 1035 and the Williams percent R 10. It was just something something that I asked Ed not to share yet because it's not really proven. But if we continue to do what we have figured out, maybe it will be published soon. So the idea is to catch it on. So if you go down to Williams percent R, Ed,
Yep.
when it first breaks the no going up right there. Okay, so that's when it first truly crosses the Williams percent R. This is much like a WMB3, except that it's also has to do with some things happening in the MACD, but we're front running the PSAR usually by 2 to 3 candles or 2 to 3 bars. Then but the thing is, we're trying to ride it out, giving again another set of new rules, which is if this thing never breaks down to oversold again, you don't get out. So it gets really close right around 1 p.m. but then it goes right back up. And where it does that pause, I would be doing second position. Then it goes and it just hovers around, and then even though there is a PSAR flip right in the middle of that thing, and you would be okay if you just played the PSAR flips. He was looking for more of a longer term, absolute rule. So his rule today was, unless that thing breaks down again into oversold, we're going to keep riding that tray with his options. So I'll turn it over to Ed.
Okay.
Final song.
Yep. If you go to the next slide, you'll see it a lot more clearer. So yeah, therein we're still using the same rules that Bill said. And when I realized the mistake, because I was looking at something else at the same time when I put that entry in, I realized I made a mistake. So I quickly changed it. I closed that position out, and then I took a call at 60 in the money call. So for those who don't know, that's right at the money. So that's where you get the best move with the underlying at that time. So I was looking for it to run exactly with the stock. So again, we were testing the things out, and I looked at it. So, oh, wow, we got a cross, but I looked too early. I didn't realize, I didn't focus. It's one of those things where I had it so close in, I didn't zoom out. Good for me. And I oh, wow, wait a minute. I'm out. It's time to get out. And then I zoomed out. I was oh, man. So I got out too early on that move. And then on the next slide, yep. So you can go to the next slide, and I got right back in the third slide. Yeah.
It's important to note that after it touches that oversold and runs back up, that's where you get that signal that it's resuming. And then all of this just stays up in the regular noise barrier.
Yes.
It never hits the oversold.
Never hits, right. Correct. Yeah.
That means it's the cows are continuing to run.
Mm-hmm.
Yep.
So, and then that's where I got back in. I realized what I did. Again, I'm checking other things out at the same time. So when I came back to this one, I was like, wait a minute, hold it. This thing never dropped. Wait a minute, get back in. And you see what time this is at 2:00, just before 2:00. And, then Coach Bill called me. I go, dude, you're not going to believe this.
I'm up $1,000 and I'm, what should I do? Get out.
Get out. So, we were sitting there on the phone, and actually I got out, and you could see it actually went up another 2 points in the back if I'd have held it. But rules are my still main rule is at 3:30. I want to be out of the market. So we got out right around 3:25, 3:30. So I was good, very good, happy with it.
So that was one of the insights that we took away from this is I said, Ken and I spend some time trying to strip people of their humanity a little bit to give you a little bit of insulation from your monkey brain. But then as you start getting the 1,000 trade in or the 1,500 trades in, we want you to start listening to that whisper again, like, gee, what would Ed do? He's got the little bracelet that says, WWE.
WWE, yeah, right.
What would Ed do? WW Ed.
Yeah, WWE.
So I said, hey, if you're starting to have those thoughts, just get out.
Get out.
Yeah. How much capital did it take you to buy those contracts?
That one, let's see, because they were 5, they were $18. So that was roughly 2,000 capital. So, because the first position.
So if you just do it with the underlying stock, that means you got to, in order to make $1,000 on a $3 move, you had to buy 330 shares at 60, which is $20,000.
Correct. Right.
So the $2,000 option controls enough so that when it makes a routine move, you make 1050 instead of the underlying having to pony up 20K. So I just want to make that point.
Yep.
Okay.
That was a good
what
point.
Else you guys got?
So, yep. Thank you.
So that was
all
our
right. Back to
first trade in the
program.
experiment.
Yep.
All right. Standard reports. Dashboard 1. Sideways quiet. Nice recovery. There's a lot of room for this to go. So if this holds and goes here on the risk Z, that's why there's that DIA swing trade and the Intel and the Caterpillar, those things are just going to explode with goodness if the market is able to hold here. And it's really just nervous and sideways holding on the 200-day moving average. Now, notice on the min pains, the ones that are doing best: Nucor Steel, Caterpillar, McDonald's, Coca-Cola, Procter & Gamble. Was there ever a less risky group of 5 symbols ever? No. The answer to that is no. Intel has room to go. Brazil has a lot of room to go. And so if they fail, they're going to fail large because they're in the max pain. But the min pain candidates are the old reliables, and a couple of those are on the swing trades that we like. Lots of auto framers. Not surprising when the market had sold off previously, like last week. 15DD and Johnson & Johnson. Not much else to see there. The ETFs have a ton of auto framers. EWW, just notice, it has been exceptionally outperforming its peer group over the 10 days to the 1 year look back. Today was a sell-off, and that's why I didn't mind cashing it. And then when it showed some intraday support, re-entering the swing on a CATA 2. But its running buddy Brazil has just been horrible. So I'm really ready to play Brazil short and Mexico long. And if Devon Energy was any indication, and energy's coming around, XOP should do really well, and it's been postured pretty nicely. So we'll keep an eye on that. And then this was the beginning of potentially a recovery in real estate. Now look at real estate. It outperformed today on the 1 day, and then it's been negative. That's U.S. real estate, the last great bastion of protected investing, right? It's so oversold that's why I'm thinking the IYR swing may have some room to go. That was the justification for that. Lots of auto framers for you to consider, and daily squeezes, the usual. Godzilla's, a handful in the S&P, all quiet. There's not a lot of volatility out there, even on the things that are dramatically oversold. That's why, to me, the absence of panic is hinting up. There's a couple double greens on this one, so I'm liking that. Kraft, I think that's Kraft. Salesforce. Now that's nice because you'll notice it's at the high end of its index and is violently up. CRM could be an interesting follow through. Salesforce. And then in let's see, let's run to the tactical set real quick. Yeah, Rivian and VIX, the only real interesting volatility. Intel, I'm loving this, by the way. The fact that it's been uber quiet and just started to make its move in the second half of today's session that we got 5R on, that thing's ready to go. Not saying it will, but it could. And that thing has been beaten down so bad. Look at this. It's in the winter of MACD and extremely harsh winter. When the Z-score is in the harsh winter, what that means is if you had the zero line here and the MACD comes way down in the winter, the Red River, which is a 30-period Bollinger Band on the MACD line, shows you sort of the range of normal. And then wherever the zero line in the Bollinger Band is, that's a Z-score of 0. So when Intel's winter is down here at minus 1.76, that means it's well outside the Red River. So that would be minus 1. It's almost at 2 standard deviations away from that average. That's how harsh that winter has been. And yet we saw in the second half of the day a really strong up move for 5R. Now that's the first day of a recovery. So don't lose your mind. But there could be some more energy coming in the second day and then the third day, and then that whole thing will turn into spring, and then you could see Intel and the semis and tech from that long sell-off begin to make that long climb to the top. Well, Caterpillar's already up there. It's already doing fine. And then U.S. Steel and Merck, they're in the summer and doing really well. Like Coke is doing really well. So that's just some interpretation on that, how to look at that. This was the strength today. Caterpillar and Cliff. Materials, metals and mining, energy, industrials. That's Caterpillar right there. Weakness, blockchain and treasuries and finance. I love this, diamonds. It's been lagging, but today was very strong. And that's a 9R swing trade in hand from the first day on diamonds. Don't lose sight of that. That's one that'll be memorable. Inside, and then finally the frog list for trading value. Here they are: Ethereum, Tesla, Alcoa, clean energy, oil exploration, Intel. Need I say more? So that's everything we got for today. We'll get this published and posted, and we will catch you in the room tomorrow. Take good care. Long out.